Yo, what is good, guys? Daniel Savage here. So, welcome to this section where basically I'm going to teach you guys how to kind of minimize your losses and basically kind of to let you guys know, like, hey, look, even if you do lose, it doesn't matter because our wins are going to eat up all of our losses if we stick to this one rule. So, basically, it's always your best bet is to always trade based off of percentage wise. Don't try to go for the most pips. The pips, it doesn't even matter, guys. What manages the percent on the trade, the risk to reward ratio, and catching those damn pips. So over here, I'm going to give you some few examples. This could be a little long, so bear with me, guys. So as you guys can see here on UJ, we do have this form of resistance that was officially now broken and retested after this super strong level of support held. As you guys can see here, it does drag all the way back. And if we go to the 15-minute time frame, remember, we like to get all our time frames. If we were to look at this 15-minute time frame, we can kind of see that, hey, look, price is ranging in between here. But as you guys can see, we did reject it, came back down right here. If we would have had a little Fibonacci setup right here, look at that, boom. Entering off the 15 to 618 with stops right there at the support, a little bit under support. Could have targeted up here. Right there. Now look at that. That's 2.43 times your risk. So right there, at the end of the day, you're making twice your loss right there. So let's say, for example, we have $1,000 balance right here. This trade, I don't recommend this. Nobody take this type of trade. Why? Because it's too much consolidation, and this is the side channel, basically, if you really think about it here on the 1 hour. It is the side channel. Remember, we don't like to trade that. We like to trade the breakouts. So basically, on the higher time frame, we do have a double bottom that came to retest the neckline. So it was still very valid, believe it or not. So let me just give you guys a little example right here. So we have $1,000 in our account, right? And then taking a 3% risk with a 20 pip stop loss. In this situation, it was a 28 pip stop loss. 28 pip stop loss. Select the pair. We're on the Steno app right here. So in this situation, we would be risking a 0.10, about $30 to make 2 times our risk. So what happened here? We made 2.4 times our risk. So we're going to get $30 times 2.4. That's going to be $72 added to our initial balance. So now we have a $1,072 account. Amazing, 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 amazing. So let's keep this up. Let's keep this up. Okay, we have broke officially over this level of resistance, and we are continuing to respect it. So now let's go here to the 15-minute. Let's see what we see. Okay, we have a double bottom right here in play. Very nice, very beautiful setup. Let's go to the 5-minute really quick. 5-minute, okay. What do we have? We have a form of Fibonacci here. Remember, we only go here when we're desperate. So as you guys can see here, boom, we got this Fibonacci play here, right inside right here. Where could our stops be? Look at that. It's so small. Stops could be under this previous low for about 14 pips. Take profit 4. Still in between a 1-to-1 risk to reward ratio. Remember, we like to use our higher time frames, and we like to see where we could possibly go. And if you see here, sorry, I'm going quick, guys. Boom, we could target potentially right here. Now look at that. Let's go back to the 15-minute and the 5-minute. As you guys can see here, boom, we had this little retracement, clean. We broke above, came back down. Could have gotten another little entry. Let's check the 15-minute now. As you guys can see, starting to look a little decent. Either way, we have entries here. That's a 4.49 risk to reward ratio. If we didn't get in on here, let's just forget about this one. It's a little bit more aggressive entry. Enter right here. Boom. We had literally touched it, wicked right here, and then started to go back up. So going here. Going right there. Stop loss. A little bit right here. 13 pip stop loss. This is a 3.65 risk to reward ratio trade. So basically, let's say we were to hit this risking 3% on our balance, which is now $1,072. Let's do this. 13 pip stop loss, 3% trade. Look at that. You are making $32.16. $32.16 is if you were to lose 3% on your balance to potentially target this zone right here. Look at that, 3 times 3.7. Look at that, you're making literally $119 on this trade. So guess what? Now you have 2 wins in a row. So look at this. You have 2 wins in a row, guys. Let's add it to the balance real quick. Your 2 wins in a row. So now our balance is not $1,072. It is $1,072 plus $119. So now you have $191 added to your balance at a balance of $1,191. So guess what? What does that mean? You're up 20%. You're up 20% on your account balance in just 2 trades based off a trading risk right there. So let's say, for example, our next trade. Okay, what's our next trade? Right here. Let's say our next trade right here, we wanted to go long on this super choppy setup right here. And we had stop losses right here, take profits right there. So let's say, for example, we had stop losses right here for about 18 pips. But after hitting our entry, after hitting take profit 1, we didn't put stops to break even, and we didn't want to take partials, and we just wanted to be greedy. Let's just say we would have let it ride, and we would have hit stop loss, risking 3% on our account. So at this moment, we have $1,191, risking 3% with a 18.3 pip stop loss. So guess what? We just lost $35. So look at that. We just lost $35 on that trade. And imagine, our account balance still sits at $1,156, $60. So either way, we only lost 3%. And what does that mean? We're still up 15+% on our account balance. We had 1 loss, but guess what? It doesn't matter, because on our other wins, we had a $72 win and we had a $120 win. So a $35 loss is nothing. We would have to lose 2-3 times over in order for them to start eating up the losses. So when you have 1 win, keep in mind, when you trade based off a percentage risk to reward ratio, you can always win 2 to 3 times, maybe even 4 or 5 times the amount that you're willing to trade right here, that you're willing to risk. So basically, over here, let's say we just wanted to take this setup right here. Golden zone right here. Boom. Take this trade. We'll risk 16 pips. Now our balance is $1,156. Risking 3%. We have a, 16 pip stop loss. Okay, we just lost $34. So now what? Minus $34. We're still at a balance of $1,120. So we're still up 12% on our initial deposit. And we only lost 2 trades, basically. So let's go over here. Let's say, damn, okay, you know what? Another day comes by, you see a setup, okay, boom, you're thinking clear, thinking real nice, thinking, let me get off 15 minutes really quick. Let's say, boom, next day comes by, alrighty, you see a nice little setup, you see a downtrend, okie dokie, boom, perfect. You take a short. Okie dokie. So you want to have 46 pip stop loss. Or like a 40 pip stop loss. Remember, we have a balance of $1,156 minus that $30 that we just lost. 1,122. 22. We're risking 3% with a 40 pip stop loss. Okay, so we're risking $33 on this one. $33 to make exactly 3 times our risk, 3.3 times our risk. So we're risking $30, $33, boom, times, look at that, massive move. To make 3 times our risk, so put it that way. Even though we lost 2 trades in a row, we just had a winner right now that basically just gave us literally 10% on this trade. So imagine, we're up 10% on this trade alone. And now what? We're sitting back up over 20% on our account balance. One loss didn't take away everything. It didn't. We kept going. We kept going. So the best thing to do when it comes to Forex trading, guys, is always make sure that your risk to reward ratio is always bigger. Always bigger. At least a minimum of 1.5. 1 is the bare minimum. I wouldn't even enter that. But you know what? Sometimes the markets give you what you got to get, and that's what all you can get. So always try to aim for those 2 to 3 risk to reward ratios, 4 or 5 even better if it's even possible. So always try to do that. That's what I definitely recommend for you guys until you guys start to realize, like, hey, look, man, I'm advancing in my trading. I'm doing lovely. I'm doing great. And then, boom, you guys will start to catch moves, and you guys will start turning more professional as a trader every single day. You know what I'm saying? It's all about patience, and it's all about risk management. You know, if you can manage, a $30 account, hey, man, you can manage a $300 account. If you can manage a $300 account, you can manage a $3,000 account. And guess what? If you want to make 6 figures, you got to be able to manage 6 figures. And you can't manage 6 figures if you can't manage 5, 4, or 3 figures. People don't know, and people don't realize that, hey, look, if you can't manage $100, you'll never be able to manage anything other than that. So learn to work with the smaller numbers before you start working with the big numbers. You know what I'm saying? I know people who have started with $50,000 and have lost it in a month, gambling it. You know what I'm saying? And then I have people who have turned $500 into $50,000 in 3 months, compounding their account. So, I mean, guys, all it really takes is just patience and discipline and risk management. You know what I'm saying? So anyways, guys, I really appreciate you guys taking the time to watch this 13-minute video of me adding numbers and doing very terrible just math. So anyways, guys, thank you guys so much. Remember, guys, always try to aim for a beautiful risk to reward ratio. Always don't think about the pips. It doesn't matter about pips. It doesn't matter about the lot size. It's all in the risk to reward ratio. Always. Doesn't matter, man. The money will always follow. Keep that in mind. Thank you guys for watching. I'll see you guys in the next one.